What is market cap? You hear the term all the time trying to learn about stocks on YouTube. You see the little market cap section on stock charts, but let's be honest, you don't really know what it means. But hey, that's all right. I promise you, once upon a time, a long time ago, Warren Buffett didn't know a thing about stocks either. Fast forward 82 years later, he now has a net worth of $108 billion and is referred to as the greatest stock investor of all time. That's the beauty of learning. If you didn't know, now you know. Christopher Wallace. Now, to the point. Market cap or capitalization tells you how much a publicly traded company is worth. What does that even mean? Let's take a look at this Tesla Model S. It says here that this car is worth $108,000. To buy this entire car in one transaction, it would take that much. So now, let's look into Pepsi stock. If we look right here, it says this company is worth $249 billion. In order to buy this entire company in one transaction, it would take that much. Now right here, you're probably wondering, well, if that's the price tag, has anyone ever just flat out bought a company? Yes. It doesn't happen often, but when it does, it definitely sends a shockwave throughout the finance industry. Now there's other elements that goes into flat out buying a company, like how many shares are available to buy, deals for payment plans, etc. But to put it simply, yes, a person can flat out buy a company if they can cover the bill. Now that we know how market cap relates to a company, let's talk about how it relates to the company's stock. By using the amount of stocks issued and multiplying it by the current stock price, you can actually calculate a company's market cap yourself. Now you might be asking, why would I want to calculate it myself? Especially when the stock chart has it displayed for me. Well, let's just say you're comparing two companies. Pepsi trading at $181 a share and Coca-Cola trading at $61 a share. You can't really tell me who's a bigger company just based on share price. You also need to know how many shares the company offers. So let's say Pepsi has 1.38 billion shares and Coca-Cola has 4.32 billion shares. That puts Pepsi at a valuation or price of $250 billion and Coca-Cola at a valuation or price of $264 billion, leading it to actually being a bigger company. By the way, if you're interested in long-term investing, I highly suggest you looking into one of these two companies. Coca-Cola has actually been a long-time favorite of Warren Buffett. Let's just say he's bought so many shares between 1988 and 1994 that he now owns 9% of the company. The more you learn about stocks, the more you'll learn that blue chip stocks are your best friends when it comes to playing the long game or long-term investing. Now, how else can market caps help you? Knowing a company's market cap can help you get a feel of how mature the company is and help determine what to expect from the company going forward. Larger companies are usually a more secure investment. They have more to lose when taking risk, and it gives you comfort knowing that their business model has already withstood the test of time and proved to be resilient. The only drawback with larger companies is, like I mentioned before, they're less willing to take risk. That's a good thing and a bad thing. It's good because you know that your investment is safe, but bad because of hesitation to take risk, the odds of their stock skyrocketing up are less likely. Larger companies tend to grow at a very slow pace, and they know that, which is why they've found other ways to incentivize shareholders by offering dividends. Now, dividends is a topic for another video, but to put it simply, companies whose stocks don't really offer much growth will still persuade you into buying shares by offering a very small percentage of the amount of money that you have invested into the company. This payment is usually quarterly and very small, but it is a safer play than investing your money into a younger company that don't offer dividends but offer short-term growth opportunities, because younger companies tend to be highly volatile or they have a stock price that jumps up and down frequently. Now, smaller companies with a smaller market cap have more room to grow, which means their stock price has a lot more room to grow. They are riskier, and unlike larger companies, their business model hasn't really withstood the test of time just yet. One 2009-like recession could still wipe them out of their industry, but that's not always the case. Don't forget that once upon a time, all of those larger companies were once smaller companies. This ideology is the foundation of short-term investing. Again, that's a topic for another video, but to put it simply, buy low, sell high. That's a common phrase used in short-term investing. A younger company is usually very volatile, which allows a lot of opportunity to jump on the stock when it drops and then sell it a few days, weeks, or months later at a higher price. This is how Tesla made a lot of people rich between 2018 and 2020. But yeah, to wrap it all up, market cap can be a very useful tool in evaluating the size and behavior of a company. Knowing these two things can help you determine where or even if this company fits into your investment portfolio. Larger cap companies tend to be a safe and stable investment due to the larger company's age and responsibilities. Due to a larger company's safer plays, they normally shy away from risk. That results in less frequent spikes in their stock price. Because of the lack of growth opportunities, large cap companies tend to pay out dividends to their shareholders, a great option for long-term investing. Mid-cap companies tend to be very successful in their industries but are still competing for the top spot. They've usually been around for some time, so they're pretty seasoned and somewhat predictable, leading to a more stable stock. But they're also still willing to take risk to take the company one level above their competition to claim the crown of their industry. Now, just because a company has a mid-range market cap doesn't mean that they're still competing for the top spot in their industry. It's definitely a possibility that they are an industry leader, it's just they've maxed out all the potential revenue that industry has to offer. One way to figure this out is to compare their stock with their biggest competitors. Just something to remember. If you're looking for a stock that's in that sweet spot of growth and stability, maybe mid-cap stocks would suit you best. Small cap companies are usually just breaking ground in their industries and constantly trying to find ways to expand. They don't have much to lose at this point of their maturity and everything to gain. They can have some game-changing winning ideas, and they can also have some game-changing losing ideas. Small cap companies usually do not pay dividends because they are more focused on putting their money towards more growth. Investing in this type of company has a lot of risk, but if you pick a future winner, it can also offer great rewards. Small and mid-cap companies are usually how investors become rich in the stock market. The trick is to conducting solid research on a growing company to see who has the greatest chance of succeeding in the future. Speaking of research, if you're feeling overwhelmed with learning basic stock market investing terms and techniques, but you still really want to get into this lifestyle, I just want to remind you guys that basics is what this channel is all about. This channel will be covering all these stock market basics to get you on track to evaluating companies and picking your own home run stocks. If you've learned absolutely anything at all from this video, please hit the thumbs up button below so I know to keep creating videos like these. It's really my only way to know what content is working for you guys and what's not. The sole purpose of this channel is to help you guys learn, and I'm trying to do that in the best way possible. So a quick thumbs up will really go a long way. If you want to learn more than you know now about stock market investing in a very simplified, easy to understand approach, I highly suggest that you subscribe to this channel so you don't miss out on more videos just like this one. Until next time.